All right, hi everyone. In this video, we're going to walk through the actual assignment. So I previously made a video that showed you how to accept the invitation that I will have emailed out to you, and then accept that and get logged in up to this point with your QuickBooks Online account and kind of your example company that we're going to use for completing the project here. So again, this is back to our portal for QuickBooks, but I want to show you real quick an Excel spreadsheet that I've created that's going to go along with the project, and you will see that linked to, with the spot where it'll say click here to download the Excel transactions to be recorded in QuickBooks Online for this assignment. So let me click over to the Excel and we'll take a quick. Okay, as I mentioned, here's an Excel kind of instructions, or with the detail of all the transactions basically that we are going to be recording in QuickBooks. And so one more time, this will be available in Canvas. There will be a link you can click there to open this up. I'm also going to make a version of this in PDF form, so you can download that and print that out if you'd like. That might be good to do, if you're working on one screen with QuickBooks pulled up in front of you, following along in my video. You might want to print out this form, this list of transactions, so you have that at hand so that you can refer to that while you're watching me do my work and go through inputs, and you can do the same thing that way, and it'll be a little easier, if you print that out essentially. So hopefully that makes sense. And that's what we're going to do basically. So I'm going to click back over to QuickBooks, and then we're going to go through and record all 13 of these transactions into QuickBooks Online. And then we have two adjusting entries to record, one that we're going to record for depreciation expense, and one for amortization of our prepaid rent and prepaid insurance assets, and record the rent expense and insurance expense for April. And our scenario here is that we are a new business just established on April 1st, 2025, and we're going to be recording all of the April business transactions, like I said, into QuickBooks essentially. So I will be doing that, into QuickBooks. You're going to have QuickBooks pulled up and following along with me. If you are working on one screen, and you have QuickBooks pulled up, I might recommend watching the video on your phone or on a tablet or something, so you can kind of have that to refer to at the same time. You can be looking at QuickBooks. You can pause the video after I do a certain task, etc., put it in, and then push play. So I'll leave it up to you all to figure out the best way to be able to watch the video and do the work here. I'm sure you're pretty used to that by now with all the videos that I supply as resources for you all to do homework, etc. Similar type of thing, but you will want to have QuickBooks, pulled up, and then some additional reference materials. So yeah, if you want to print that out, probably not a bad idea. And with that said, let's click back over to QuickBooks and get started. Okay, so now we're back here on our QuickBooks portal, and lots of information. Again, we're going to keep it basic. We're just going to record all our transactions in with journal entries, and then we're going to look at the financial statements and print the accounts receivable and accounts payable aging reports. You can print those or export those along with financials. You will upload that to the location in Canvas where you'll have a little upload link kind of spot there. You can drag it on, and then I can review that and give you your points for completing the assignment. So let's begin. Okay, so when we are putting in our journal entries, we're going to want to click on this little plus sign here. And one thing to note, if you followed along with my account or company setup and you selected all the same options that I did, you should have a view that looks exactly the same as I'm looking at here, and the plus signs up here in the top right corner. But I will say, if for some reason you deviated, and it's not a big deal, but if you did something different or clicked a different button during setup, there's a chance that the plus sign could be over here, and just the whole layout of the screen kind of depends on your initial setup there. So it can look a little different, but just hopefully it's in the same location with the plus sign here to do journal entries and all that. This is, we click in there and click journal entries, but just, I want to throw that out there in case you're seeing any different sort of page layout. Know that everything's still accessible. You might just have to look on this side for the plus sign or something like that. So if you run into real issues and you're significantly different, can't figure out how to navigate, reach out to me and I can give you a hand there. But Yeah, okay, let's get started here. So we're going to click into that plus sign and then go to journal entries. And that's going to take us to our journal entry input screen here. I'm going to click the date back to April 1st. So as I just mentioned, in our scenario that we're going to be inputting transactions from, we're going to be considering these transactions all to be input during, this is all the April activity, the month of April, basically. So yeah, so on the screen here, we can kind of see from a journal entry input standpoint, you've got lines here to input, very similar to what we've done, in Excel or on paper, right? You got accounts, you got debits and credits, you got a place to put in a description here, and the date listed up here. There's also, again, additional functionality like the ability to add attachments or pictures. In the real world, these things are handy, but we're going to keep it pretty basic. So yeah, let's get started. Okay, so I'm going to copy and paste in my descriptions here, and you all can kind of type these in if you'd like, if you have it printed out, or something. If you're able to copy and paste it, awesome, but not a big deal if you don't. We do want a description on the transactions, and this will tell us what we're going to basically record, right? So we're going to invest, so $40,000 of cash was invested into our business as an initial contribution to get the business started. So here, when we go into selecting what account we want to use, we can type this in. There's a lot of pre-populated accounts within QuickBooks Online, and so you don't necessarily have to make a new account every time or that kind of thing. It already sort of has this full set of accounts that they've created. You can create your own, and we will do some of that. But something like cash is very often used, and so it's an option there that they've already created for us. If you started typing in cash, type in CA, you see that it just kind of comes up there. So not too hard. So yeah, again, we're just doing the same old journal entry type work we've always done in this class. So we're debiting cash, so increasing our asset by 40,000. And then we're going to be recording an investment into the business. So in QuickBooks, they have that as we've talked about contributions, maybe using that terminology. They call it owner investments. So that's going to be our equity account, our credit, to record the fact that we just put in 40,000 into the business. And one thing to note when you're putting these journal entries in, once you select the account for the second line item, essentially, it will pre-populate the amount to make the debits and credits automatically balance, and it copies down the description as well. So that's kind of a nice functionality there. You can see the debits and credits of balance, the date looks right, and then we're going to go down and click on this Save and New button. Save and New means you're going to save this journal entry and open up a new journal entry screen to record the next journal entry. You could also, there's this little down arrow that gives us the option Save and Close, but we want to keep doing our work. So Save and New is the path we're going to go down there. Okay, so we recorded journal entry number 1. Now the second journal entry occurred on April 2nd. And in this journal entry, we paid $12,000. And here, I'll copy this in. So again, I'm just pasting in from that spreadsheet that's available on Canvas and that I was just showing us. And yeah, so this is the second transaction. And what we did here was paid $12,000 to Landlord Co. to cover our rent for 12 months. So $1,000 a month, essentially. And we're paying for 12 months beginning April 1st, 2025. Okay. So remember that is going to be called prepaid rent, right? And so go ahead and type in prepaid rent into the account line here, and we're going to actually create an account for prepaid rent as opposed to using the template accounts like we just did for cash and owner's investment. So type in prepaid rent, and then you'll get a little drop-down box that looks like this, and just click that portion where it says Add New Account, or and it'll bring us to this new account screen. And then from here, we can see that's the account name that we want, prepaid rent. The account type is going to be a prepaid expense. So let's see, what do we have here? Other current assets is the account type there, and then the detail type will be prepaid expenses. So drop down list, do other current assets and prepaid expenses. It gives you a little preview of how this would kind of look on a balance sheet. So that's fine. But just make sure you get this information correctly there. Okay, and then it was $12,000, so we increased prepaid rent with a debit by $12,000. And then we're saying we paid cash to the landlord, so we're going to credit or reduce our cash. Remember, crediting reduces assets like cash. And yeah, the auto population happens, so now your debits and credits, that 12,000 automatically populates there. Description comes down. The date looks good on the 2nd, and we're done with that journal entry. So we'll click Save and New. Okay, and we're on to our 3rd journal entry here. I'm going to copy the description in, paste that. So we paid $1,200 to Allstate for business insurance, and this insurance is going to last us 12 months, starting with this, month of April 1st. And we made this payment on the 4th, so let's make sure we've got the right date recorded. So again, we're going to type in prepaid, but this time we're doing prepaid insurance, and we're going to click that Add New button. And we're going to just make the exact same selections that we just did for prepaid rent. We're going to select other current assets and then prepaid expenses. Our account name of prepaid insurance is good. And yeah, that should be good to go. Okay, so click Save. And same deal here. We paid cash to Allstate for this policy. Put our debits and credits in there. Yeah, so this asset goes up, prepaid insurance, cash asset goes down, and we are good to go. Date looks good, Save and New, and let's go on to the next journal entry. Okay, so the next transaction here is that we paid $750 to purchase office equipment from Office Depot, and so that is going to be an asset, or a fixed asset, or a capital asset, a long-term asset that needs to be depreciated essentially. And so there are some accounts pre-populated within QuickBooks that will work for this purpose, but let's go ahead and create a new account for office equipment. And so now we're gonna, the account name, it just carries over. That's good. We're gonna select fixed assets as opposed to other current assets for the last 2 we just did. And we're going to pick, so this is office equipment. So let's go through and say it's fixed asset, other tools and equipment. Let's just make that selection. I think that makes sense. Take a second look just, all right, how about, let's do machinery and equipment. I think that makes the most sense. And yeah, we're good to go. So we just need office equipment, fixed assets. It's not the biggest deal in the world, where you pick this one, but machinery and equipment is where I'm going to put that. So follow along there if you want. Click Save. We increased our asset with a debit of $750. And then we said we paid cash, right? So it could say on account. That would mean we need a payable and a liability essentially as the credit, but we paid cash, so we're good to go there. And increase this asset of office equipment, and we decreased our cash asset. Okay, let's say, and let me look at the date. Make sure that 4/5 on this one. So on April 5th, and then Save and New. And if you make an error on the date or something, don't worry too much about it. As long as you get it all within April, you're totally fine. Not a huge deal. And you can go back and make some corrections. If you run into a problem like that, reach out to me and we can kind of troubleshoot. But as long as you get them all within April, you shouldn't really have an issue. So, but I'm going to try your best to get it on the right date. So the next transaction is on the 10th, and it says that we paid $1,000 to purchase office furniture. So this one's office furniture. And again, there is a furniture account. And so let's go ahead and actually just pick furniture, long-term office equipment furniture. And so that is a template account, that came with that QuickBooks provides to you. So let's pick the template account in this instance, and we might be able to make some distinctions here between the account that we just made for the fixed asset for equipment versus the selection of a pre-populated one. So, okay, so we paid $1,000. So cash again goes down. Long-term office equipment goes up. The date is right. $1,000. Yep, looking good. Okay, save and new. Let's go on to our next journal entry here. And now this one happened on the 15th. So let's update our date. And it said that we took a bank loan out to purchase a vehicle of $30,000. So I'm type in vehicle, and vehicles is a specific option for fixed asset or capital asset essentially. And we're going to record an increase to this asset type of $30,000. And then as far as we took a loan out now to purchase this, so we're going to type in loan, and long-term business loan comes up. So let's make that selection. I know we've used notes payable often in our journal entries, etc., but QuickBooks gives us this account to pick from in its template report, template accounts. So we'll go ahead and pick that. So now vehicle asset has gone up. Liability for the loan has gone up as well. Credits increase liabilities, debits increase assets, and it's happened on the 15th. Okay, we're good to go. Save and new. Okay, the next one happened on the 18th. And in this instance, we're finally starting to get some revenue going, so that's a good thing. And now on the 18th, we received $5,000 of cash. So again, I'm going to debit my cash this time. And we provided services to customer co number 1. And again, in the real world, this would have an actual customer name. I just made these generic customer company 1. Now, we've been using service revenue. Again, we kind of look and see what's the options in QuickBooks, and they give services. It's an income account, so it is revenue. Slightly different name than we've been using, but that'll work for our purposes. So the revenue gets an increase with a credit of $5,000 there. Cash goes up $5,000. Date looks right, and we're good to go. Save and new. Okay, on the 21st of April here, update my date there. So April 21st, we paid $70 to fill up the company vehicle with gas at Costco, it says. So vehicle gas and fuel is a template account provided. It's an expense account. So remember, debits are an increase to expense. It says we paid it, so it's just, we assume paid cash. So we're crediting cash there to reduce our asset and record the expense of the fact that we, used up that fuel essentially. And this is the 21st, looking good. Save and new. Okay, our next transaction is that we are doing our billing basically at the end of the month. And so we're sending out invoices to our customers because we're assuming we did some work here during the month. And for customer company 2, again, generic name, but that's fine. This is a second customer that we did work for. And they owe us $2,000. We're getting to the end of the month here. The date for this transaction on our Excel shows that it's the 28th. And so this is a very realistic scenario. You get to the end of the month, you've been providing services for your customers, and you go back through and say, okay, I'm now going to sit down at the end of the month and send out all my invoices so that they get those, and then they turn around and write me a check essentially. So with that said, we're going to be paid later. So remember, when we're going to receive cash later, we're going to use accounts receivable. And then we're going to use the same revenue account, though, that services income account. And it was $2,000. Okay. Oh, and one important thing here, as we're starting to input payables and receivables, we need to associate this receivable with customer number 2, customer code 2, because we want to keep a listing of all the customers who owe us money. And that'll be called an accounts receivable aging report. Aging, it'll show how old, when it was that customer owed you. And so what we need to do is associate this receivable here with customer company 2. So we go into this name input, drop that down. It's customer. There's a couple different selections, but we want customer here. And let's just put in customer co 2. There's a bunch of other information you can actually put in, for more real world use. But again, we're keeping this basic. So just put the company name in and it fills out everything else essentially, and then click save. And then you can see we've associated that receivable with the right customer there. And I'll show you later where that shows up and why it's important. But otherwise, we're good here, and we'll click Save and New. Okay, the next transaction that we're going to record happens on the same day. Again, kind of you can think of us as sitting down doing all of our billing at the end of the month for our customers, and same day basically. So okay, now we know customer number 3 we did work for during the month owes us $5,000. So let's go ahead and do right off the bat, let's add the new customer again, just like we did for customer co 2. We're going to associate this with customer co 3. And it's going to be the same transaction otherwise. Accounts receivable, services, revenue. They owe us $5,000 instead of the $2,000 that the other customer owed us. So let's just put the right numbers in there. And we're good to go. Okay, save and new. Now we're going to go through, and it says this is on the 29th. So our next transaction is us recording bills that we got in the mail. Another realistic scenario, unfortunately. Sending out invoices to get paid is a lot more fun than paying bills, but we got to record our bills, and we want to get the expenses, remember, in the right month, even though we're paying them later. So how we're going to do that then, is use an accounts payable liability account, right? So hopefully that makes sense. We've been working on this real basic foundational concepts for our class here and just accounting in general. And so here we are, we received a bill for internet phone services from Comcast. So let's go through and see what options we have. So if we type in, there's the option internet and TV services in the account, canned template accounts that QuickBooks provides, and that'll work for our purposes here. That's fine. Let's put the $200 in. And then, as I mentioned, we're going to use accounts payable to reflect the fact that we incurred the expense in April, so the expense is in the right month, but we're going to pay it later. So we're not crediting cash yet because we haven't paid it, but we're going to do accounts payable. It's the liability. And then just like we added customers to associate with an accounts receivable, we're going to want to go into add new, but change it to vendor. And we're going to want to put not customer, but Comcast is a vendor for us. And we're going to go ahead and type in Comcast as the name of our vendor and save. And now our accounts payable for the $200 is associated with Comcast, and we can keep track of that easily. Okay. Let's go ahead and go to a new journal entry here. And so the next transaction it notes is that we received a $400 electricity bill for April's PG&E usage. And let's see, do we have, I think electricity's got to be in here. Yep. So type in EL, you can start typing that in. You'll get electricity as an expense account. And it was $400. Same situation with the payables, right? We're going to pay this later. We just got the bill in the mail. It's for April, so we want to make sure we associate the expense there in April. But we're going to need to go in and create a vendor again, this time for PG&E. That's who we're paying. Click Save, and we're good to go there. Okay, save and new. Now we're down to the last normal journal entry for the month, kind of operational entry. We'll do some adjusting entries next. This one happened on the 30th. So let's click that. And now we need to record the fact that we withdrew $3,000 cash for personal use. And so now we're not going to do owner investments, but QuickBooks gives us the option of owner draws to reflect taking cash out of the business. So $3,000. that's cash that's being reduced from the business account. So we just credit cash to reduce it. And that's looking good. Okay, save and new. Awesome. Okay, so now we've gotten all through our normal transactions for the month, and we're on to our adjusting journal entries here. And so on the Excel template, we have two kind of transactions noted as individual items, one for depreciation and then one for the recognition of rent expense and insurance expense out of the prepaid balances that we have now. So let's start with depreciation expense. So I'm going to type in depreciation, and you can see it gives us this other expense category. It's an expense. Depreciation is in their template, so that's great. And let's put a description of, we'll just put monthly depreciation expense. That's fine. And then if you noted here, and if you got the Excel or the PDF printed out, you can see that I provided the depreciation expense amounts for April. So again, this is something you should know how to do with straight line depreciation. Take the cost minus residual value divided by the useful life. We've talked about that in the class, and you're going to need to know that, in the future in terms of how to calculate depreciation and whatnot. I just give you the numbers because I want you to focus more on QuickBooks and getting a feel for the system, not calculating depreciation expense in this particular project. So I did, use those methods, but I came up with the numbers myself. So you can see those on the template. And what we're going to want to do is make some accumulated depreciation accounts. So I'm going to put accumulated depreciation, office equipment. And so that's our first depreciable item, is the equipment. I'm going to type this in with the office equipment added on the end there. And then we're going to go in and create a new account for this one. We're going to call this a fixed asset account as the account type, but then accumulated depreciation as the detail type. And then one kind of new little tweak we need to do with accumulated depreciation is we need to make it a sub account. And then the parent account in this instance is going to be office equipment, because it's the accumulated depreciation for office equipment. So that's what we need to select there. And that's the parent account, and it's a sub account, so on and so forth. Okay, and then let's do accumulated depreciation office furniture. Okay, and then again, we're going to add new. We're going to call it a fixed asset, accumulated depreciation. We're going to make it a sub account, and it's going to be the sub account for office furniture. Wherever we put that. Okay, here with furniture. So we'll select there, and okay, that all looks good. Click save. And then finally, accumulated depreciation for vehicle. That was the last depreciable item here, and same whole situation. Fixed assets, accumulated depreciation, make it a sub account, and we're going to select vehicles here as our parent account. Click save. Okay, and then I gave you the three amounts of depreciation expense to be recorded, and I didn't put the total of all of them together on the Excel template, but if you type in the individual amounts associated with each one of the asset types here, so 17 for the equipment, 13 for the furniture, and 360 for the vehicle, you can see the totals up to 390, and then that's kind of helpful to just note that the total depreciation expense associated with recording all these individual accumulated depreciation amounts to those assets totals to 390. Okay, so we're good there. We got our depreciation expense recorded, and we'll go save and new. And we're on to our last entry now. Again, adjusting entry is generally always on the last day of the month, so we're just leaving that as April 30th. And our next entries are going to be amortization of prepaid expenses. So that's amortization refers to the process of taking your prepaid expenses or other types of assets like that, and then recording the portion of expense that you've incurred out of that prepaid expense for the month, for example, right? So we paid prepaid rent for 12 months, but we've used up one of those months. We paid for prepaid insurance for 12 months as well, but again, we've used up that 1/12 portion in April already. So the first one we're going to do is just type in rent, and building and property rent is a good expense account there. And then in the Excel template, I really broke it down for you. And basically, right, we paid $12,000 in total for the year. So if we divide that by 12 months, easy math, it's $1,000. So that's just going to be $1,000 of expense. And we're going to reduce our prepaid rent asset account by $1,000. So now it's going to have an $11,000 balance, which reflects the 11 months that we still have covered. And then we're going to record insurance expense. So we can use that template account. This one's just $100. It's, we paid $1,200 as opposed to $12,000 for insurance. And we're going to reduce our prepaid insurance account by that same $100 there. So it'll now reflect $1,100, representing 11 months. Prepaid rent will reflect $11,000, reflecting 11 months. It's just a difference amount, in the amount that you paid, basically. But that should be good there. We've got our debits and credits equal, and we are basically on to having all of our journal entries complete. So at this point, we don't really need save and new because we're done with our journal entries. And so we can instead do our little arrow down and click save and close. And that brings us back out to the dashboard page. And now all of our journals and activities should be recorded for the month. And next, we'll take a look at some of the reports and make sure everything looks like it was input correctly. Okay, so to look at different financial reports here, we're going to want to click on our reports icon, and we can just click on standard reports. And as you can see, QuickBooks offers a whole bunch of different types of reports. We're going to keep it basic here and just look at the balance sheet, the profit and loss. And profit and loss is another name for the income statement. You'll also sometimes hear it abbreviated as P&L, but that's profit and loss. And again, same as the income statement, just a different name for it. But we're going to look at the balance sheet, the profit and loss, and then we're also going to look at the accounts receivable aging summary and the accounts payable aging summary. And I'm going to have you export those or print them, and you can upload those to Canvas, and that's how you'll basically receive points for the project. So let's start by looking at our balance sheet here. One thing we're going to need to do, it automatically defaults to May, right? And we're recording April activity. So one thing we can do is just go into our report period drop down, and we can select last month from that. And so that updates essentially to give us April instead of May. It automatically changes the dates there to 4/1 to 4/30. Okay, so now we can scroll through if you'd like, and here you can see all of your balance sheet. So our cash account is $26,980 now. AR shows $7,000. This is those prepaid insurance and prepaid rent accounts like we just talked about are both at $1,100 and $11,000 after the adjusting entry. Let's take a look down here. We've got furniture, and then right below it, we've got our associated accumulated depreciation. And this gives us a net value, a net book value for the furniture. And then the same thing for the office equipment and the same thing for the vehicle. So that's kind of a nice breakout. One thing to note too, you can collapse, different line items and stuff. So there's quite a bit of functionality within the reports here. And hopefully you can see how much, this was basically automatic based on our inputs for journal entries and so forth. So it's a lot easier than having to go through and input lots of detail, as far as creating a journal entry or creating a financial statement, an income statement, balance sheet. This all kind of just automatically happens. So that's the power of QuickBooks, and it's really customizable too. So we're not going to do much customization, but just keep that in mind that you could change these reports up quite a bit, add comparison columns, all kinds of stuff. So down here in the equity section, we can see that we had net income, we had draws, and there's our investment. So it kind of breaks out the detail on all that. We have our business loan amount. Our accounts payable shows $600. So that's those 2 bills that we put in that we have yet to pay. So I think we're looking pretty good. And let's go back to standard reports. And what did we do? Okay, let's just exit without saving. I think when we collapsed one of the lines, it asks you if you want to save that collapsed line. Just as you change things, it will ask you to save your customizations. Again, let's go to last month for a report period. So here's our profit and loss or income statement. And so you can see we earned $12,000. We paid $1,000 in rent, $100 in insurance, electricity, internet, and then we had our depreciation. And then we recorded fuel expense. So pretty good. We only had 460 of expenses, and that's just other expenses. That's where kind of collapsing this actually becomes handy sometimes, because it's a lot easier to see how the breakdown works when it's less detail. So we earned $12,000. We had expenses of $1,700. Again, that was rent and electricity and other things of that nature. And then other expenses of depreciation and fuel, $460, and you end up with net income of $9,840. So doing pretty good. And there's a lot of, like I said, customizability in terms of where accounts show up. You can do a lot in this to change things and make it fit your purposes. Again, I'm going to leave that for the QuickBooks account or other education you guys might do in the future. We're just keeping things basic. But that's our profit and loss. So let's go back to standard reports. Let's exit without saving. Now, like I mentioned, let's take a look at our accounts receivable aging summary. And I'm going to leave the date on that one. I'm going to say, this is as of today. Let's just imagine that we're in, this is actually today as I'm recording this, 5/3/2025. And so if we wanted to look and see, okay, who owes us money again? This is the report, one of the reports, the best ones to go to see this and say, oh yeah, our 2 customers here that we have, this one owes us $2,000 and this one owes us $5,000. The total is $7,000. And it gives you that when it says aging, really what it's referring to is how old are these amounts? When did we, how long have they owed us this money? And so we could see that was relatively recent, right? We just recorded those entries on the 28th when we sent these out of April. So really, it's only been a few days here if we're thinking of looking at this on May 3rd as opposed to April 28th when we sent out the invoices. And so not until 30 days later would the amounts move through these categories. And the one thing that's handy, especially for companies that have lots of outstanding amounts owed, think of like a hospital and how many patients they have, and how many bills they have outstanding. It's an insane amount of detail that you would need. And you want to categorize those by how old they are, because if a bill that someone owes you money and it's getting 91 days or older, that might entail you needing to put that customer to collections or to at least reach out to them. As this gets older, you're going to want to reach out and say, hey, make sure you got our bill in the mail, do the kind of work you can to make sure that they're aware of the amount that they owe you and that they're working on it. So that's the AR aging summary report. And then very similarly, we also have the AP accounts payable aging summary. And so that's going to show, okay, we owe Comcast $200, we owe PG&E $400. And this is for our use to understand who we need to pay. And so we can also similarly look and see how old these bills are and make sure that we're not missing payments and they're not getting very old, hopefully. So 2 really important reports. And all 4 reports that we just looked at are, fundamental for business tracking and accounting. And so, yeah, that pretty much brings us to the end of the project. But what I want you to do in order to get, credit for your work in completing the whole project then is, let's go to the balance sheet. Go ahead again and drop down to last month for the reporting period. So get it to be April. And you don't need to change anything. Don't drop, don't collapse any rows or anything. Just get the date working right. And then we're going to come up to this icon here that says export. Click that. And now you can either export to Excel or you can export to PDF. And so you'll click on one of those. You'll see, you can't really see it on my screen, but it'll tell you we've successfully downloaded the report. And if it should be in your downloads folder for your specific computer. You'll now have a report that has a whole name that says something like Accounting 20 Spring 2025 Example Company 1 _ balance sheet. Something, I think that's what the name of the file will be. But that file is now, on your computer. Let's go exit without saving. And then you can upload these files to me so that I can give you the points. All right, so here's the P&L. Again, I'm just going to walk you through the process of exporting each one of these. Change the date range to last month, so it's April. Looking good. We've got all our detail here, and then same exact process, export. And I don't care if you do Excel or PDF. I wouldn't do CSV. I honestly don't care that much if you do CSV, but CSV is like an Excel that doesn't have the formatting. So ignore that option. Pick one of these, export to Excel or to PDF. I just clicked on the PDF version to see how it comes up, and you can kind of see what you'll get. And so you can just say save as PDF if you're doing it in PDF version. Print would, try to send it to your printer essentially. But if you click save to PDF, it will just go again to your downloads. And it looks like on my computer, the file name would be profit and loss, all one word. So that's totally fine. If you want to do PDFs, that works as well. Either one, just upload it to Canvas in the upload spot for the assignment. Okay, now let's go back to standard reports again. Exit without saving. And then let's go to our accounts receivable aging summary. This one, again, I'm not going to worry about the date there. So you can leave that and just go directly to your export. I'll look at export as PDF again just to show you. So you can do save as PDF and it'll download it. Or you can do export to Excel and it automatically just goes to your downloads without any extra screen that you need to select from. Okay, and the final one, our AP aging summary, then exact same process, right? Export to Excel or export to PDF. So now you should have 4 different files in your downloads folder on your computer or wherever, your files when you download them off the internet get saved to. And yeah, hopefully you all were able to follow along well and didn't run into any issues as you were going. You have the 4 different files now. And if you could take those files and upload each one to the Canvas module for this project on the normal upload spot, then I can review those and make sure everything looks okay. If I see any weird issues, I'll maybe reach out to you if anything looks specifically wonky, but hopefully you were able to kind of tell that yourself as you're going through. And if you ran into any problems, reach out to me and let me know if you're having any issues, and happy to help with that. But yeah, hopefully you enjoyed getting this exposure. QuickBooks, like I said, is a very commonly used accounting software. So having some skills and at least having some exposure to QuickBooks and what it does is important. I highly recommend taking the QuickBooks class if you can to learn even more. It's a really powerful tool that you could learn this software, especially online, because it's so easy to access from anywhere. And if you got good at QuickBooks Online, you could start your own bookkeeping business for customers, and they just send you financial information at the end of the month, and you could create all do their bookkeeping and record keeping for them. You'd probably need to learn, some advanced QuickBooks skills, nothing that would take you years of study or anything. You probably would, take you a year or more to get really good at it, but you could get started out with this software, find businesses who need accounting help or bookkeeping services, and start your own business and become, financially independent, essentially, if you were doing bookkeeping services. So I think it's really cool. It's cool that it's available online as well, so you wouldn't even need to have physical files sent to you at all, or mailed to you or dropped off to you by a client. You could literally just you could almost just share access to a QuickBooks Online, and then you as the accountant would be able to access into the system and do all the cleanup that you might need to do at the end of the month, and just help them get financial statements. I mean, there's real value in that. If you can produce financial statements, reconcile their accounts, like their bank statements, maybe their credit card statements, so on and so forth, make sure that they've done their adjusting entries for recording things like depreciation or amortization like we just did. Also maybe things for recording interest expense for debt payments that they might have, things of that nature. But very, very powerful. This is used by, I'm sure, millions, just tons of businesses use QuickBooks specifically. And yeah, if you can learn it, that's going to be a really marketable, valuable skill. So, all right. Well, thanks everybody. Hopefully you enjoyed the assignment, and let me know if you have any questions, and I hope you all have a nice day. All right. Bye.